Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. 12 noon, halfway through the trading session. I am Reema Tendulkar. With me is Nigel D'Souza, and the markets are turbocharged. Fresh all-time highs at the start of the week. We had a gap-up opening. We built on it. And as we speak, markets are at the high point of the day with the benchmark indices gaining close to about 1%. There is bullish sentiment across the Asian markets as well. And it's Hang Seng, or the Hong Kong market, which is leading the charge there. So that is a gain of close to about 550 points as we speak. And back home in our own markets, it's the banking sector led by the corporate banks, which are, trading with very strong gains. So the Bank Nifty itself is higher by close to about 400 odd points. Hi, Nigel.
Well, Reema, the word you used was turbocharged, and that precisely seems to be the case. You know, we started off in the green. We're building on those gains. At 10:30 a.m., we were up close to 95 points. Now we're up 115 points, moving to the high point of the day. So things looking very, very good. And not just that, the Nifty Bank was an underperformer on Friday's trading session. Today, it's bounced back and made up all of those losses. In fact, it's a relative outperformer in today's trading session. First up, running you through Godavari Power and Ispat. That's the stock on our radar. Remember, pellet prices, they have been surging. In fact, they're at the highest levels we have seen in the last 4 years, with prices surging on the back of strong demand as well as supply shortage. But to get a sense of what's the exact price increase, we are joined by Mr. Dinesh Gandhi, the director of Godavari Power and Ispat. Thanks so much, Mr. Gandhi, sir. We have been looking to have a word with you for the last couple of days. Give us a sense, what's the last price at which you have sent one of your shipments? If you could tell us what is that, and compare it with the average of quarter 1.
See, Nigel, the last shipment which we have done for iron ore is about 7,500 in Chhattisgarh, as well as close to about 7,200, 7,300 rupees a ton in Odisha plant. The current prices in the market has shoot up because of the shortage of iron ore pellet, and current asking price in Chhattisgarh market is close to about 8,500, and Odisha remains at about 7,500 or so. As compared to our average quarter realization, Q1 realization of close to about 6,000 rupees a ton, some 5,900 odd rupees. So that's the scenario in the market, and looking at the current market conditions, of course, the shortage is primarily because of two reasons. One, the shipment from NMDC has gone down in the market because of the lower,
so Mr. Gandhi,
because of the monsoon,
right,
and the export demand has been continuously increasing.
So the 6,000 rupees is what your average first quarter prices were. We understood that in fact the export market was at around 8,000 rupees. Now you're saying shipments are going at even 8,500 rupees?
Yeah. The asking price for local market as well as export is close to about 8,500 ex-plant Chhattisgarh and 7,500 ex-plant Odisha.
Okay. So at 8,500, that's a 40% increase compared to your average of Q1. Mr. Gandhi, afternoon, and thanks so much for joining in.
Yeah.
What about
Thank
volumes?
You.
If you could give us a sense of the kind of volumes the company is selling in terms of pellets, and how would it compare with the prior quarter, and the kind of volumes you suspect the company will be able to sell for the full year?
Like, in full year, Odisha, we would definitely do close to about 590,000 to 600,000 tons. And in Chhattisgarh, we will do, more than about 1.8 million ton of production. Out of that, close to about 0.7 million ton will be our captive consumption. So 1.1 million ton will be the sales in domestic as well as in the export market. Now, the overall realization, we believe, will be definitely better going forward because of the recent price increase. Although the average realization in the impact of this price hike, especially will come in the Q3 of FY19 in the current year. Because in current quarter, we would still be having some orders in the backlog which will be supplied at the all time.
Okay,
but fresh bookings...
Right. Mr. Gandhi, just hold on to that thought, sir. The Godavari Power and Ispat stock has had a good run in this month itself, because we have seen that prices have been moving higher. Today, it's holding with a gain of around 2.5% approximately. But you pull up a last 1 month chart, you'll see the stock is up close to around 20%. But it's not just Godavari Power and Ispat. There are other pellet producers, the likes of Sarda Energy. That stock should come up for you on the screen. That as well has moved to the high point of the day. The stock is up close to around 5% as we speak. We have Jindal Saw as well, because these are pellet producers. At one point of time, no one wanted pellet producers and no one wanted pellet offtake. In the last year, it even went down to around 4,000 rupees. Now it's double of that price, and that explains why these stocks are doing well. But Mr. Gandhi, you're one of the largest sellers of pellets in the country. I think the fourth largest, if I'm not mistaken. How much of this price increase flows down to your operating profit? If you could give us a sense on that front.
No, like, if you see our the March quarter realization, which was close to about 6,500 or so, we did an operating profit on sale of close to about 28%. And now with the price as more than 7,500 rupees a ton, definitely our margins are going to go above 30% on a yearly basis.
Okay. So operating margins of over 30% for FY19. Any indication or any expectation in terms of what your revenues will look like for the full year?
The revenue we also expect close to about 20% higher than what it was last year. Maybe more than about 20% or so.
Right. Mr. Gandhi, if I take a look at 1 million tons being sold at 2,000 rupees higher, that will be around 200 crores of additional revenues. Now, all of that will flow to the operating profit?
Some, iron ore cost increase will be there because we are currently close to about 75% captive. So 20% of the material we buy it from the market. And we believe that with the increased realization on the pellet, iron ore prices will also shoot up to some extent.
So, but as you are saying, 75% you're getting from captive sources. So most of the top line should flow to the operating profit.
Right. Majority of it.
Majority of that. So for the year, what kind of an operating profit you look at then?
It would definitely be better than what it was last year. Exactly pointing on the actual number would be very difficult.
No, because in the past,
our margins will definitely be better than the last year. And we see an total overall revenue growth of close to about 20% or more than that.
All right. What about your debt reduction plans? If you could update us on your debt, the latest figure, and any plans to deleverage your balance sheet?
In fact, we have already reduced about 75 crore during the current till as we speak now. And going forward, our original target was close to about 200 crore for the whole year. We believe that this amount will also exceed going forward with the better realization and margin.
Okay. All right, Mr. Gandhi, thanks so much, sir, for stopping by and giving us all those details. Well, the stock is, it's more or less flattish. It's seen some mild profit booking from the top. That's Godavari Power and Ispat. These stocks have had a big run. So Godavari Power and Ispat and both, even Sarda Energy, just a few trading sessions ago, on the same show, we had Sarda Energy telling us that prices had moved to 7,000 rupees. And on that day itself, these stocks had a big run. Now, in fact, you're seeing the likes of Sarda Energy are still holding with some gains. You have Jindal Saw, that's the other one, that's on the west. And that as well has some amount of their iron ore coming from captive sources. In fact, that's moved to the high point of the day, sitting with a gain of close to around 6% as we speak. Well, on that note, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay with us. All right, then let's get you a check of all the stocks that are making news and buzzing in today's trading session. Sonia's with us first. Sonia, tell us about Sundaram Finance.
Okay, so Sundaram Finance came out with its numbers post-market hours on Friday, and the numbers look pretty good. In fact, the Q1 profits have gone up by almost about 26%. The disbursement growth for the company was very strong. 3 quarters in a row now, the company has been doing very strong disbursement growth. 19% is what we saw in this quarter. The AUM growth also has been almost 21%. Now, when we spoke to the management, a couple of weeks back, they did indicate to us that it's the commercial vehicle segment where the loan growth has been very strong. They're expecting mid-teens growth in the commercial vehicle segment, particularly in the light commercial vehicle segment where we've seen a really strong growth. Overall, for FY19, they hold on to their guidance of low to mid-teens disbursement growth, and demand continues to be very strong for them.
Okay, but on the other side of the spectrum is LIC Housing Finance, where the numbers look disappointing. That stock is down close to about 7.5% in trade, and brokerages are not very happy. So Morgan Stanley has downgraded the stock to an equal weight from an overweight rating. They've kept the target price at 560. They say the retail non-performing loans have doubled on a year-on-year basis. While yes, Q1 is seasonally weak in terms of the NPAs, but this increase that we've seen in the retail NPAs is unusually high. The home loan disbursements were weak. The loan book has shrank on a quarter-on-quarter basis. The retail asset quality was weak, and it will remain the dominant debate. They've cut their estimates by 7 to 13% at the profit before tax level. Kotak too has downgraded the stock to an add from a buy rating. Their target price is at 610. They say the numbers were weak on multiple counts. The year-on-year NIM compression or the net interest margin compression on the back of repricing of loans, moderate disbursement growth of 5% in the retail business, the increase in the asset, worsening in the asset quality are all factors that worry them. So brokerages have, like Morgan Stanley and Kotak, have downgraded LIC Housing Finance on the back of their numbers. Here is more from Vinay Saha, the MD and CEO of the company, on the growth outlook for the company going ahead.
Last year, see, our growth rates for the year fiscal 17-18 were in the ranges of 18 to 19%. So the loan, because the loan book, this base is very high, so we would this base is very high, so we would try to reach that number, but it should be more than 15% by maybe a couple of percentages. Going forward, we are working very hard on increasing our total income, interest income. Once that gets onto a higher growth trajectory, probably NIMs will also improve.
All right, then. Future retail is high in today's trading session as well. Mangalam, there are some unverified reports, but the stock is up close to around 3.5–4%.
Absolutely. Though it's off a little, 1.5% from the high point of the day, there are reports across various newspapers. I'll read both of them out for you. One report says that Amazon plans to invest $700 million in future retail or future groups businesses. Retail is the expectation of the street that Amazon will put in $700 million. Both the companies, they've signed a term sheet, and the negotiation is between $600 to $700 million for about 12 to 15% stake in future retail, which values the company at around close to around 33,000 to 35,000 crores, which compares with the market cap of about 26,000 crores before today's close, or rather before today's open as far as futures stock price is concerned. The other report says that not just Amazon, we have Google, which is looking to join forces with Alibaba-backed Paytm Mall, and they are looking to invest about 3,500 to 4,000 crore for a 7 to 10% stake in future retail. So this would value the company at anywhere between 40,000 to 50,000 crores. So the CNBC TV18 independently did not verify that report, but we did get a comment in from the management who said that as and when, if there is a tie-up, they will communicate. So far, this is speculation. That's pretty much about it.
Okay, thank you very much for that. An investment in future retail will help them deleverage their balance sheet. The debt on the books is close to about 13 billion rupees. And it will help the company in general transition from an offline model to an omni-channel model. But let's move on. Torrent Power is surging in trade, and there is some news on CG Power as well. Anisha joins us for both. Anisha?
Well, yes, Reema, not just today. Torrent Power has been on an up move in the last 10-15 days. It was trading at a level of around 220 15 days ago, and now it's over 250 rupees. Now, Spark has written a note today, and they say that Torrent Power is a company that you cannot ignore from the power sector. And the reason is that it is one of the few private players that has enough cash on its book to actually buy on some assets. Now, they also say that the company's prospects look better. Even the fact that their ROEs of the companies are improving is one thing to watch out for. They also like the fact that the safe cost-plus method of the company helps them to generate enough cash on the books as well. And hence, they give a bull case valuation of around 300 rupee per share. And that is if they get the full valuation for their assets as well as the distribution business. But as of now, they have a target price of around 210 on the stock with a sell call, and that is because 40% of the company's power assets are lying idle, and the reason is there is not enough availability of cash. That is something that the company is working to improve on. In fact, Ambit had earlier pointed out that the peaking power policy of the country is actually under trial, and if that comes through, it will be positive for the company as the government will give them enough gas to really work on their idle assets as well. And just a word on CG Power, it was trading higher. Remember on Thursday, we got an exchange notice that the company has hired one of the big fours as the joint auditors. The auditors of the company was actually an overhang because they resigned in April. So that comes as a positive news as well, and the stock is reacting to that. Back to you.
Okay, all right. Thanks so much for that, Anisha. Well, back to Mangalam. Not good news coming in for Nesco, Mangalam.
That's right, Nigel. If reports are to be believed, there would be no exhibitions at the Bombay Exhibition Centre, which is run by Nesco near Goregaon, up until the completion of Andheri, the Hisar metro construction, which is underway along the highway. And that is something that the BMC has notified that the company. Remember, the work on Metro 7 is expected to complete by 2019. So up until then, there perhaps may not be any exhibitions out there. Though there is uncertainty on whether this, how the company plans to tackle this or not. But just a few numbers. As far as the exhibition business is concerned, that comprises of around 43% of their revenue, and which has 80% of margins. The company's business is essentially leasing out exhibition center and their IT building, for which they get rent, which is why it's a high margin business. 90% is what they enjoy in their IT park and 80% on the exhibition center. So with this ruling coming by, does that impact their future contracts as far as exhibitions are concerned or not, is something that we will have to watch out for. Is there an appeal against this or not, is something that we have to find out for as well. More importantly, from the long-term perspective, they do have their IT building, which is underway, construction of which is underway. The management had joined us. They said that they expect 100 crores of revenue coming in from the IT building, 4 of 17 lakh square feet this year and 200 crore in the forthcoming years. And secondly, they have another exhibition center construction planned in the second half of this year. Does that construction go uninterrupted, and going forward, once this metro is completed, does that bring more revenue to them or not, is also a big question. So the important point, of course, being there is near-term uncertainty on the 40% of the company's revenues.
Yes, and that's reflecting in the stock price today. Mangalam stock is down close to about 6 to 6.5%. But Nigel, an upgrade by Citi on for JSW Steel?
Yeah, there's a couple of factors actually playing out for JSW Steel. One is that if you do a calculation and if you see the Nifty rejig, JSW Steel should come into the Nifty. So that's one reason as well. While there is some adjustment in terms of portfolios, and the stock is trading at fresh all-time highs. The note that we're talking about today is Citi's note. They've upgraded the stock to a buy from a neutral. The target price has been raised to around 420 from around 295 earlier, and they've also hiked their EBITDA estimates by around 19% to around 26%. That's the operating profits they're estimating for the next couple of years. They're saying that, in fact, the spot spreads, they're at the highest levels we have seen. They're expecting it to sustain because domestic demand is strong, and Chinese winter cuts, they are likely to be more effective. So that's why, in fact, we're seeing that supply constraints should help them in terms of pricing. The only problem is that aggressive acquisition of Bhushan Power and Steel, that could be something that could reduce the upside. But otherwise, they are impressed with the company looking to raise its capacity from around 18 million tons to around 24.7 million tons. And that's why, on the whole, they're bullish on the stock.
Okay, thank you very much for that. The Nifty rebalancing is effective the 28th of September, but the announcement is expected to come in later this week. And as Nigel said, the expectation is that JSW Steel will make a come in. But moving on to the telecom space, in the news because Reliance Jio has now overtaken Vodafone to become India's second largest telecom company, and that too, Nigel, within just 2 years of the company's launch. So if you look at the quarterly adjusted revenues that the companies have reported in Q1 of FY19, you can see Bharti on top, but Jio is ahead of Vodafone, and Jio now trails Bharti by just about 24%. If you look at it in terms of a revenue market share, also Jio has pipped Vodafone with a market share of 23.5% lower compared to a Bharti. But on a consolidated basis, because there have been so many mergers and acquisitions in the telecom space, Idea and Vodafone will continue to take the pole position with a 36% market share. Airtel, Tata Tele, as well as Telenor combined will come in second at close to about 33%. The other interesting thing that is, thrown up in terms of the data analysis is what Kotak has said. They said that the industry revenue in Q1 of FY19 was flat. In fact, on a sequential basis, just up 0.6%. And this, despite, the industry pie being flat, Jio has managed to improve their revenues by 14% on a sequential basis, which basically means their, revenues are coming in at the expense of peers. So Bharti was flat, but an Idea Vodafone actually lost revenues to the tune of 6% on a quarter-on-quarter basis. So what Kotak is saying, that if Jio managed to deliver an increase in revenues without needing the industry revenue pie to expand, it is a worrying sign, because now they no longer need, pricing increases to actually achieve their objective. So that throws up some, a conundrum for the incumbent players like an Idea, Vodafone, Bharti, because do they choose to match Jio in terms of a pricing? But if they do that, then Jio will also respond, and therefore the industry will shrink. So that's a lose-lose situation. Or if they continue to price their services like a Bharti and Vodafone at a premium to Jio, then the industry pie may remain flat, but they continue to lose market share to Jio. So that too perhaps is a lose situation for the incumbent players.
Okay, all right. Let's cut across to Nimesh Shah. He's in conversation with Vikas Gatani, the founder and chief investment officer of Progress India Opportunities Fund, from the sidelines of the 14th annual Motilal Oswal Global Investor Conference. Nimesh, over to you.
Thanks, Nigel, for that. So, yes, we have Vikas Gatani with us. Vikas, thank you very much for talking to CNBC TV18. Markets are at record highs. We've pretty much scaled, back to 11,600 on the Nifty. But it doesn't seem to be, very much from the FI perspective. The FI seems to be net sellers since the beginning of the year. As an FI yourself, what are the key risks that you see for India, which is the reason why FIs have not been big investors into Indian markets?
Yeah, there are quite a few reasons why FIs have not got so enthused about the Indian market related to the domestic investor. One, the foreign investor has a lot of choices available in terms of alternate markets and asset classes. So if you look, US markets have already been at all-time highs. S&P is up about 7.5% for the year. Nasdaq is up about 12% for the year. So one is that. Second, if you see over the last 3-4 years, India has had a number of one after another areas of concern, which sort of dampens the enthusiasm for the foreign investors. So you start with demonetization, then you have the effect of GST, then you have had renegotiation of the tax treaties, then you have had the imposition of long-term capital gains tax, and then you have had the currency, for the depreciating currency. As you know, US dollar has been rising, Indian currency is down about 9.5% for the year, and with rising oil prices, etc. And now you have elections within the next 8 to 9 months. So those are factors which keep the foreign investors a little less interested in the Indian markets related to the domestic investors. There is always a certain set of long-term investors in India who are still enthused, and they stay on in the market. But to find a marginal investor is always more difficult.
So how are you tactically right now positioned into India? Are you overweight in your India portfolio?
So Nimish, we are an absolute return fund. Our fund is an institutional fund catering to the institutional investors. It invests in large cap liquid stocks. So our fund is a fund for all seasons. We strictly believe in the long-term Indian story, but at the same time, we also want to deliver steady, consistent returns to the investors. So we manage the volatility well in the market. We continue to remain overweight in the Indian markets from a longer term point of view, and we are selectively focused on the right segments in the market.
Okay. I was just looking at the brief details about where all you invest, and one thing which clearly stands out is the rural space. The rural consumption space is something that you all are very bullish on. While the earnings have been pretty strong for many of the rural companies, but the valuation itself are also very rich. How do you marry this whole cocktail of rich valuations and the fact that they're continuing to grow very well?
So we invest in the beneficiaries of what the domestic demographics is all about, which is the rise in the spending pattern of the young consumer. Yes, to a certain extent true that some of the consumers' names are quite richly valued, But if you look at the overall space, you can always find selectively good pockets of opportunity. So let me give you an example in terms of media space. And if you look at what's happening with all the kind of consumer companies, the spend on advertising over the last few quarters, which is significantly picked up, we find number of media companies which are still very reasonably valued, and that's one of the opportunities areas we see.
The other space which probably is of quite interest to you within the financial space is the NBFCs and microfinance companies. Why NBFCs and why not look at large private banks?
So two things are happening at the same time. First, let's look at the overall space of the banking segment itself. So as you know, about 63-65% of the total non-food credit comes from the public sector banks. And public sector banks are still engaged in the resolution of the stressed assets. And though it is being, it's getting resolved, and hopefully over the next few quarters, the process will get smoother. But still, they're primarily engaged in resolution of the assets. So what has what has happened is basically this has created a space where the private sector banks and the NBFCs essentially have a lot of leeway to operate, because the public sector banks are just tied up with their own balance sheet resolution. Now, private sector banks, a number of senior managements, there's some sort of transition happening in a number of public private sector banks. Selectively, we continue to like the non-banking NBFCs, basically NBFCs, which do not have so much of compulsions on their capital, so they have a lot more room to expand their balance sheets. In particular on the MFI segment and the MSME segment, we continue to remain very positive. We think obviously demonetization resulted in some sort of stress on their balance sheets, but they've cleaned up, they've gone through the pain. They have also become a lot more risk conscious. They are managing their balance sheets well. A number of these strong entrenched MFI players actually have improved on their balance sheets. So there's a lot more headroom for them for growth.
Okay, that is Vikas Gatani of PIOF saying that the FIIs are less enthusiastic about the Indian markets because they have other alternatives. For instance, the US markets have been also hitting fresh record levels day after day, and there are some concerns in the Indian market. That said, they believe in India's long-term story, and therefore they remain an overweight over the longer term. Let's slip into a very short break. We'll come back and address the market technicals. Ashwini Gujral, Prakash Kaba join in with their trading strategy. Stay tuned.